The Dow finished up 99 points today. That would otherwise be unremarkable, but for the fact it was down more than 1,100 earlier in the day. This as the markets have tumbled badly to start the year. Chief among investor fears appear to be concerns the Federal Reserve will aggressively raise interest rates to tamp down inflation. Meanwhile, the rising threat of war between Russia and Ukraine has added to the negative sentiment. And joining us now with more are Lee Baker, owner and president of Apex Financial Services based in Atlanta, and closer to home, Michael Stritch, chief investment officer at BMO Wealth Management. Welcome both of you to Chicago tonight. Lee Baker, what accounts for the wild gyrations in the markets today?
I think you nailed it. The thing that started it is a concern about what the Fed's going to do relative to interest rate hikes over the course of the year. Now, candidly, I think some of it is a bit of an overreaction. Yes, inflation is a problem. It has turned out to be less transitory, if you will, than the Fed initially thought going back to last summer. By this time, the anticipation was that all the supply chain issues would have eased up and we'd be moving away from that 5 to 6% year over year inflation kind of number. But it's still here, and it's likely to be here, in my opinion, at least another 3 months or so.
And
but
today
I think this
caps
was a
off
reaction to it.
a relatively poor start to the year for the Dow and other markets. The Dow is down 6%, the S&P 500 down 8% year to date, and NASDAQ 12.5%. Michael Stritch, what accounts for this performance for the first 3 weeks of the year?
Well, I think we had a tremendous year last year, a tremendous year the year before, and there is, always room for a correction in the face of a longer-term uptrend. And I think that's what we're seeing right now, and it has been driven by a couple factors. Lee mentioned, the inflation and interest rate story. We're in the middle of earnings season as well, and results have been okay, but perhaps not living up to the heightened expectations relative to past quarters. So I think that's weighing a bit on investors as well. And then, of course, as you mentioned at the outset, we do have some geopolitical tensions unfolding in Eastern Europe. But I would just reiterate that this is, although it seems extreme, and today's action was extreme, which we'll talk about, it is in the context of the broader uptrend that we've been in, something that can be, in fact, considered quite normal.
So, Lee Baker, is this a normal correction then to the hot market of the last year or so, or does it portend something more ominous like a bear market?
Yeah, so I believe this is a normal correction. I think one of the issues we've got is that over the course of the last few years, we've been lulled into a bit of a false sense of security because corrections that are normal in most years just hadn't happened. And so we'd have these little mini corrections, if you will, where the markets would pull back 4 or 5 points, but that would only last for about a week. So having a pullback of 10% is quite normal under most circumstances. It's just that hadn't been the case for the last couple of years.
And we mentioned investor fears over the Fed possibly raising interest rates. Jerome Powell, the Fed chairman, has hinted that those might be coming. Michael Stritch, why does this make investors so skittish?
I pledge to do everything within.
Well, I mean, there's really the primary reason, I think, from the Fed's from the perspective of interest rates going up, has got to do with this idea of no better alternatives and misallocation or reallocation of funds. When you see interest rates in 1% range, and now all of a sudden at 2, maybe above 2 later this year, you start to ask yourself, is there a better opportunity in some of these fixed income instruments versus equity? So I think there's this kind of multi-asset class rotational consideration. And in particular, that's impactful for technology companies or other sort of high growth companies where you don't realize a lot of the value in terms of free cash flows and the like till well into the future. And when you see interest rates go up and you think about how equities are in effect a discounted valuation back to present day for those future cash flows, if rates go up, that challenges that long-term valuation level, which impacts technology at the margin, which is what we're seeing leading to the downside here. So that's really the risk with the Fed and inflation. I think the concern for the market is that the Fed goes too far, too fast, and rates spike too high. I think, as Lee said at the outset, we're probably at the peak sort of hawkishness perspective right now. And so we should see some of this stuff retrench in the coming weeks and months after the meeting this week in particular.
Lee Baker, what about the other geopolitical factors that you brought up? A pending military action on the border of Ukraine and Russia, the still raging Omicron variant of the coronavirus. How big a factor are these?
I think those factors are fairly large, particularly the geopolitical one with Russia and Ukraine. Anytime you've got the specter of potential military action on a large scale, that makes people nervous because you don't know how all the dominoes will fall. And one of the things that we've learned through the years is that markets like certainty. Well, if you're bringing in the specter, if you will, of does this thing with Russia and Ukraine end up being something big? Does it spread to other countries? How do other countries get involved? That's a lot of uncertainty, and the markets just don't like that uncertainty. Now, on the COVID front, again, as many people hope and or believe, perhaps Omicron is the beginning of the end, if you will, to the transition from pandemic to endemic. But if there comes along another variant that is as transmissible as Omicron, but as deadly or sickening as Delta, then all bets are off.
Michael Stritch, we only have a few seconds left, but what about crypto? A lot of the cryptocurrency enthusiasts are worried about the free fall that Bitcoin and Ethereum are facing right now. Is this just part of the normal super volatility of those cryptocurrencies?
It is, and that's probably a segment for a much longer session.
Absolutely.
I would say, I think I put crypto with the speculative sort of technology, and there's a little froth coming out of that area of the market, and crypto is really front and center in that regard. And I expect there'll be more pressure probably in that segment in the future as well.
And that certainly is a topic for another day. And we thank Lee Baker and Michael Stritch for joining us today. Thanks so much.
Thank you for having us.